I want to welcome everyone to today's seminar on the best practices for home buying in a seller's market. We have a very distinguished panel that's going to talk about various aspects of the home buying process. And even if you're an experienced person in home buying, you'll still gain something from this presentation. A few housekeeping notices. Please, if you have questions, save them till the end. And I'd like to make sure that everybody has their cell phones turned off. Let me talk a little bit about the people who are going to be speaking today. First, of course, I'm John Rhodes. I'm from Fed Financial Federal Credit Union. I'm the CEO. We have been in business for 75 years plus, providing great deals to federal employees and their families. Also speaking today will be Chuck Goldston, Director of First Mortgages at Fed Financial, Jackie Humanick, Associate Broker Realtor at Remax Realty Services, Ray Byrne, Lead Insurance Agent at Liberty Mutual, and Brad Smith, Title Agent and Marketing Rep at GPN Title. What we're going to discuss for an overview is the key players that you interact with when you're planning to buy a home. The importance of pre-approvals, especially in today's market, and the negotiating leverage that's necessary that you gain from having your loan pre-approved. Market trends, house hunting, and tips on negotiations in the search for a new home. Homeowners insurance, what you need to protect yourself and what the mortgage company requires, and title insurance and closing. What is title insurance? And then we're going to talk about the importance of selecting the right firm to close your loan. Now, a lot of people don't believe they should be buying in today's market. And actually, there's some reasons you might need to buy, or you might want to consider buying for your financial advantage. First reason you could be in today's market is you need to move for work, or you need to move to be near family. Second reason that you might want to be in today's market is because you're paying extremely high rent, because the people who are renting to you are the same people who bought the home and are having to pay extravagant prices. So when you look at the cost of renting compared to buying, you might find that buying is advantageous, especially because of the potential tax advantages for mortgage interest. So you can see from this slide, nationally, a one-bedroom apartment increased by 24% in 2021, and a two-bedroom apartment increased by 22% nationally. Locally, if you are renting a studio or efficiency, the average price you're paying is over $1,500. And if you're renting a house or an apartment that has 4 or more bedrooms, you're paying on average over $2,700. So purchasing could be a way to save money for you. Let me talk about the key players on our panel. Well, I'm going to talk about the key players, and then our panelists are going to fill these roles and talk to you about tips for how to get the best deals on purchasing a home. First off, there's the mortgage lender. They obviously finance the purchase. It's usually a credit union like us, a bank, or a mortgage company. The realtor acts as your negotiator and intermediary between the seller's realtor or the seller. The insurance agent is the person that's going to help you make sure that you insure the property to protect yourself and that any requirements from the mortgage company are met. And the title company makes sure that the transfer of the ownership is handled correctly, issues title insurance, and acts as the closing agent. I'm now going to turn it over to Chuck Goldston, our Director of First Mortgages, who's going to talk about the best way to finance your home purchase.
Good afternoon, everybody. My name is Chuck Goldston. As John said, I'm the Director of First Mortgages at Fed Financial Federal Credit Union. As John mentioned, this market is not without its challenges these days, but my goal today is to educate you a little bit about the mortgage approval process and to show you how you can leverage the credit union advantage to give you an edge in terms of winning your deal in this current seller's market. Fed Financial is a credit union. What does that mean? As a credit union, what differentiates us from a regular bank is unlike a regular bank, we're a not-for-profit cooperative, okay? So unlike profit-driven banks, that allows us to do is to give you great rates. We've got a variety of loan offerings. We've got an ultra-efficient process that we've recently streamlined. I'm going to touch on that a little bit later. We've got a secure and user-friendly software portal, and we're member focused. As a credit union, our model is to provide the best, most personalized service for our membership. That's what we want to do to you. That's a credit union advantage. Okay, so a little bit about the pre-approval process. A couple of keys to the pre-approval process. Obviously, in this competitive market, speed is going to be the key. When you get a pre-approval, before you talk to a seller, before you talk to a realtor, you're going to want to get pre-approved so you know what you're looking for. That's going to allow you to put in an offer right on the spot. What you don't want to do is you don't want to see a property that you want to offer on and then have to go back and coordinate with me and coordinate with your realtor. By the time you come back in today's market, that property is going to be gone. We're going to hook you up with the pre-approval letter that you can walk around with. And if you see a property you want to offer on, you can make that offer right on the spot. So the speed is the most important thing in terms of making an offer in this market. Getting pre-approved is the key to that. As far as closings, we've been closing loans as quickly as 15 calendar days. That is an industry-leading rate right now. So we've been closing loans when we've really been putting our minds to it. When we have everything that we need, we can close your loan in 15 calendar days. So much so that we have a 30-day guarantee. If we get you approved and we don't close your loan within 30 calendar days, we'll give you a $1,000 credit towards your settlement. So again, that's going to allow you to shop with confidence. When you've got one of our pre-approval letters, you know you can just put in an offer on the spot, tell them you can close in 15 days, you're going to be on top of the list. So the Fed Financial Advantage, that's really important. So a couple of the keys in terms of the three facets of your pre-approval. When we look at you as a borrower, we're going to basically qualify you in three ways. The first way is your debt ratio. The rule of thumb there, if you kind of want to thumbnail it, all of your monthly gross debts, you know, your car payment, your credit cards, things of that nature, student loans, cannot equal more than 50% of your monthly gross income. That's the standard rule of thumb for a conventional loan. So that's going to be the first thing we kind of take a look at as a snapshot. If that ratio is tight for you, we can get you qualified for an FHA or a VA loan if you're eligible for VA up to 55%. So that's kind of an advantage of one of those products is you kind of get a break on your debt ratio. The second facet of the approval, we're going to look at your cash to close. So how much your total cash, how much you're going to have to write a check for at settlement is going to consist of what your down payment is, combined with the closing costs. Your standard rule of thumb as far as closing costs is going to be 2 to 5% of the purchase price. So that's something we're going to look at. We can get your approval solid, so you're confident. You know, if you have to wait a little bit higher than you're expecting, we can account for that so you can be confident that you can make that payment. The third facet is your credit score. We're obviously going to pull your credit. We're going to look at your credit score, and we can get you qualified as low as 620 minimum on FHA, conventional, and VA. One difference between FHA and conventional loans is with uh, with um, with FHA loans, there's no as long as you qualify with the lower minimum 620 with your credit score, you're eligible for the best possible rate. With conventional, the higher your credit score, the better the rate. If your credit score is a little bit lower than optimum, which is 740, your interest rate might go up a little bit. So that would be another advantage other than the higher debt ratio qualification to go with an FHA or a VA if you qualify. So again, talking specifically about the 3 types of loans. The first type is conventional. With a conventional loan, we can get you qualified with as little as 3% down if you're a first-time home buyer. If you're not a first-time home buyer, you qualify with a minimum of 5%. As you know, with a conventional loan, unless you put down 20%, you're going to have to pay mortgage insurance with that, monthly mortgage insurance. The standard with that is your monthly mortgage insurance is 0.2% of an annualized rate of your loan amount over the life of the loan. So that all the way up to a minimum of 0.2% up to 1%. So what that means as far as a monthly payment is mortgage insurance will be an additional $47 per month up to $237 per month, depending on what your credit score is and how much you're putting down. Now, we've got a great product right now that requires no mortgage insurance all the way down to 10%. So you can put down as little as 10%. You won't pay any mortgage insurance monthly or otherwise. And the rate is very comparable to what the regular interest rate is if you were paying mortgage insurance. So that's with the conventional loan. With the VA loan, with the FHA loan, my apologies, the minimum is 3.5% down payment. A lot of people confuse this. They think the FHA loan is for first-time home buyers. You don't have to be a first-time home buyer to qualify for FHA, and you can put down as little as 3.5%. The rates are also lower with the FHA loan. However, your effective interest rate isn't as low because your monthly mortgage insurance premium is higher. With an FHA loan, you've got a 1.75% upfront mortgage insurance premium, and you've got a monthly mortgage insurance premium that you will keep for the life of the loan unless you put down 10%. So what that means to you from a monthly payment standpoint, if you're looking at a $300,000 loan, with your monthly mortgage insurance on an FHA loan, upfront, that's an additional $5,250 payment that you have to make at settlement. That's your upfront mortgage insurance premium for an FHA loan. And again, with the FHA loan, the monthly mortgage insurance is a little bit higher, and you keep that for the life of the loan. So the main benefit to do an FHA loan is if your debt ratio is a little bit higher to get you qualified, you're not a first-time home buyer, and you don't have the 5% down payment. If that's your deal, then we can get you qualified for FHA. It's a great product. Again, you don't have to keep that. You have to keep that mortgage insurance for the life of the loan, but there's no reason why you have to keep that loan for life. You can always refinance out of that loan once your loan to value gets a little bit more favorable. The third type of mortgage loan is your VA loan. The VA loan, you have to check your VA eligibility. So if you look at the website at the bottom there, you can click on there. If you or a direct family member is a veteran, you can click on there and find out your eligibility. You can get qualified with the VA loan with as little as 0% down. That's the main benefit with that. There's no additional monthly mortgage insurance premium on that because that's a benefit as well. However, there is the upfront funding fee of 2.5%, just like the FHA. So just like the FHA, if you're looking at a VA loan with 0% down on a $300,000 loan, you're talking about an additional $6,450 that you have to pay at settlement. Again, the benefit is you can wrap that into the loan, so that's not more cash you have to come to the table with. But again, that's going to raise your overall effective interest rate. So in today's rising interest rate environment, obviously, you're going to hear a lot about adjustable rate mortgages. That's something we can kind of look at with you on a specific basis to see what benefits you. You know, there's nothing wrong with adjustable rate mortgages as long as you're educated going in. Obviously, the benefits of a fixed rate mortgage are obvious. Your payment is going to be the same. Your rate's going to be the same. Nothing's going to go up on your payment unless obviously your taxes and insurance rise, but that's going to be the same regardless. Uh, and that's going to allow you to easily plan for your finances for the future. You know it's going to be fixed. An adjustable rate is something that you might want to look at because it's going to benefit you on the front end. It's going to make your initial lower monthly payment lower. So that's something that can help you get into a house quicker and better, but you have to make sure you account for the interest rate going up in the future. There's no sense in getting yourself into an adjustable rate if you're not prepared for that interest rate to go up. Obviously, home prices go up, so it's sometimes easy to refinance out of it, but it's not always easy to refinance. If the market changes, that might be something you have to account for. So that's something we can look at the table initially. What's best for you, fixed or adjustable, depending on your situation. Now, as far as market trends and where the market's going right now, as you can see, mortgage interest rates, everybody's talking about mortgage interest rates rising, but everything's relative, you know. Mortgage interest rates, if you look at over a 39-year curve, over the 39-year history recently, mortgage interest rates are historically low. Now, that being said, as I'm sure you've heard, they're going up, so we have to account for that. If you look at Freddie Mac's primary mortgage market survey, you can see how much interest rates have risen over the last year. All the way up to 4.675. I think that's as of March. As a matter of fact, we checked it as of April 7th. It's a smidge higher than that now. It's 4.72. Now, that maybe sounds scary, and you might hear a lot of gloom and doom, and a lot of people talking about the ceiling falling in. But as you can see, over the 40-year term of mortgage rates, those are still historically low. There's still savings to be had if you're looking for a decent first mortgage. So that's what we can do as far as that. At this point, the next step would be actually finding a property and putting in an offer. With that, I'll turn it over to Jackie. She's going to tell you about how to leverage some of our tools to help you make a competitive offer in this market. Thanks for your time.
Thanks, Chuck. Hi, everyone. I'm Jackie Hominick with Remax. Hope you're all doing great today. It's a challenging time to be a buyer, so being prepared and having a great team behind you so that you can act quickly is really important. On average, every house that goes on the market has about 4 offers. I've seen as high as 37 offers on one house, with 48% of homes selling for over list price. 84% of homes sell in less than a month, with the majority selling in 2 to 6 days in the DC metro area. Home values, next slide, please. Home values continue to rise as our inventory continues to shrink. Home values in the last 2 years have risen 27% in the last 2 years, 13% in the last year. Once you get pre-approved, it's time to start looking for homes. Focus on what matters most. Homes are selling in a matter of days. The sooner you see the house, the better. You may only get one short 15 to 20-minute opportunity to see the house before making an offer. So it's important to focus on what matters most to you and the big ticket items in the house, such as roof, structure, HVAC, and windows. There are many ways to make your offer strong and successful. Next slide, please. The first is to act fast. Many houses are going under contract in just a few days. So you need to get into the house quickly and be prepared to make a quick decision. The sooner you submit the offer, the better. You'll want to make your strongest offer first. Most homes in the DC area are selling for higher than list price. The seller most likely is going to have many offers to choose from, and you want to make your offer stand out from the others. Many buyers are waiving contingencies to win in competitions such as the appraisal, financing, and even some waive inspection. That's why you must have your financing fully approved before you start your home search. Many buyers are also doing pre-inspections and walk-in talks. A pre-inspection or a walk-in talk inspection is an inspection you do on the property before making an offer, so you can write an offer without a contingent on inspection. You have peace of mind knowing you're comfortable with the condition of the home, and the seller has peace of mind knowing you're willing to accept that house in as-is condition. This will make your offer look much stronger to the seller. A quick closing is another way to make your offer more appealing to the seller. In this market, most closings are happening in 21 to 30 days from contract signing. Fed Financial can close you in as little as 15 days, which will make your offer much more desirable for the seller. Now that your offer is accepted, I will work closely with your lender and the title company to make sure everything goes smoothly and we get you to closing on time and stress-free. Another perk of using both Fed Financial and myself, on closing day, you will receive a closing cost credit from us. The credit varies by the purchase price of the house and the individual house. The credit is equal to up to 20% of the buyer's agent compensation. Most home buyers receive between $1,500 and $6,000 closing credit on the day of closing. Even though it's a seller's market, there are still great opportunities for buyers, especially since rent is at an all-time high. And now let's get more information on homeowners insurance from Ray. Thanks, everyone.
Thanks so much, Jackie. My name is Ray Byrne, and I'm with Liberty Mutual. I'm here to talk about home insurance. Purchasing home insurance is a vital part of the home buying process, and it's used to protect your most valuable asset, your home. It is required by your lender as part of the closing package and transfers risk from any damage that's caused from you to the insurance company. One of the key coverages that your lender, Chuck, will need to see is that you have replacement cost, meaning we are insuring the home for what it takes to exactly replace it and make you whole in the event of a total loss. I have a tool that sole purpose is to calculate the replacement cost of your home. Different lenders require different things on a home policy. The benefit of working with me is that I know exactly what Chuck, your lender at Fed Financial, needs to make the home insurance purchasing process as efficient and painless as possible. As you can see, there are several coverages and endorsements on a home insurance policy. Instead of talking about each coverage individually, I would like to stress the importance of having a conversation with an agent, preferably me, to gain the knowledge needed to understand what you are getting with your home insurance policy. As your agent, I take a consultative approach so that you are educated on the products and services that I provide. I want the opportunity to be your agent for life. At Liberty Mutual, we customize your coverages based on each family and individual's needs. It's not one size fits all. I have access to multiple carriers to find you the best coverages and pricing on the market. I'm able to do this by bundling other lines together, such as auto insurance with your home insurance. And the most attractive benefit to working with me at Liberty Mutual is that Liberty Mutual offers premier pricing to all Fed Financial members. What does this mean to you? It means as a member, you have access to the best pricing on the market that Liberty Mutual has to offer. At the end of the day, as a Fed Financial member, you will be working with an agent that can provide the speed, ease, and knowledge and competitive pricing that most people out on the market do not have. Now with that, I'd like to hand it over to Brad at GPN Title to talk about title insurance.
Perfect. Thank you very much for the introduction. Again, my name is Brad here at GPN Title. I'm a title agent and marketing representative that has been in the title industry for close to 15 years with 1,000+ closings with buyers, first-time home buyers, and sellers. At GPN Title, we are licensed to do closings in Maryland, DC, and Virginia. And as far as the overall settlement process goes, one way you can think of a title company is that we are the last leg of a relay race, getting you to the finish line. So let's take a little look at what a title company does. Once you do find that home that you love and your contract is accepted, we are then forwarded that contract from your agent, Jackie, or your lender, Chuck, and we review that contract and its addenda. This gives us fantastic information that we review with our attorneys, as well as gives us the go-ahead to order what is called a title search. We receive this title search and report from an abstractor that goes to the land records that search the records of your home for the past 60 to 100 years. That allows us, again, to provide a report that clears title for yourself as the buyer. What we also do is we are also in constant communication with your lender and all parties of the transaction, but we do prepare the final documents that are received from your lender, including the closing disclosure that gives you an overview of all your figures, and really what's important to you is what is due at closing. Coordinating the closing and sitting with you, obviously, at the closing table is extremely important, and we coordinate that again with everyone that's part of your transaction, from yourself as the buyer, your agent, your lender, and of course, we are in constant communication with the seller as well as their agent to receive important information. Another key step in the overall settlement process is to, of course, get the deed and mortgage recorded. The deed, of course, is showing the transfer of title from the seller to yourself as the buyer. And again, that document is the legal document that's recorded showing that you are the owner of the home. Another important factor that we do in the settlement process is we provide what's called title insurance, which gives title insurance to your lender and yourself as the buyer. So, what really makes us one title company different from another is I believe in full communication and the service that we provide. From start to finish, again, like I said before, we are in touch with yourself, your agent, the seller, their agent, and your lender. I think it's extremely important for you to be fully updated from the beginning to the end. And one way we do this, of course, is allowing you to have access to a secure portal that's also giving you step-by-step analysis and updates on your settlement. And of course, costs, we do provide what's called title insurance, what we'll go over on the next slide, but we also have a overall flat rate settlement fee that is very competitive and low compared to other title companies. And you might see that other title companies might break down this fee a little bit more. That might confuse you, but also a little bit higher than our low flat rate settlement fee. So again, I touched on title insurance, and really there is two types of policies that you receive as a purchaser. One, there is a basic standard title insurance policy that protects you from any pre-closing defects in title. So really at the time of settlement and going backwards, on previous ownership, the title insurance policy is protecting you from any clouds or defects in title. Another policy that is offered is what's called an enhanced policy, which gives you a little bit more coverage on top of the basic standard policy. This covers post-closing fraud, forgery, identity theft, mechanics liens, invalid permits, unrecorded leases. But it also, what I think is important in the enhanced policy is that it gives you an up to 100%, or excuse me, 150% of your original policy amount, which is your sales price. So again, that just gives you a little bit more security and a little bit more coverage with the enhanced policy. So, I mean, again, all in all, with GPN Title, we are part of the settlement process from knowing that it's your big day, and we look forward to working with you in the future. Thank you very much.
Well, I really appreciate all the people who were able to present today, and I hope that you were able to get tips that'll help you succeed in this tough market. If there's any questions, we are opening the floor for questions now. I don't see any questions. I do want to give the contact information for everyone that was presenting today, and it's on this slide here. On behalf of Fed Financial Federal Credit Union, I thank you for watching this webinar.